Welcome back to Investing Talk Podcast. We're so glad you've joined us today for another deep dive into the information that matters most to you.
It's a fascinating one today, definitely.
Yeah.
Lots of moving parts to untangle here.
Absolutely. Today, we're tackling a question that I bet many of you are asking. Is MP Materials a good time to buy now?
Mm.
We've got a whole stack of sources, detailed investment analyses, breaking news. And our mission, as always, is to cut through all that noise.
Yeah, pull out the important bits.
Exactly. Extract the nuggets of knowledge and, well, give you that shortcut to being truly well-informed.
Sounds good.
Before we dive in, though, if you're finding value in these deep dives, please consider subscribing, liking, and maybe dropping a comment. Your support really helps us keep these conversations going.
It really does.
And hey, if you're feeling generous, you can also consider buying us a coffee. It truly helps keep the lights on, so to speak.
Much appreciated.
Okay, let's get into it. For listeners who might not be familiar, what exactly is MP Materials and why is this company, so strategically important right now?
Well, what's really fascinating here, and kind of the core point, is that MP Materials operates the only rare earth materials mine and processing facility in the entire Western Hemisphere.
The only one?
The only one. And this isn't just about, digging stuff out of the ground, these rare earth elements. They're absolutely critical for high-tech applications. Think clean energy, EVs, wind turbines.
Defense applications too, I imagine.
Oh, definitely. Missile guidance, advanced electronics.
Yeah.
The list goes on. So their position, it's geopolitically vital. It addresses a major dependency for the U.S. and its allies.
So a truly unique position in the market. That sounds like a pretty powerful competitive advantage, almost like a moat.
You would definitely see it that way, yes.
Yeah.
A strategic one for sure.
And speaking of strategic importance, we have some really fresh news. Just dropped today, July 10th, 2025. Shares of MP Materials absolutely surged. What happened there?
Yeah, huge news. And this raises an important point about market catalysts, doesn't it? The company announced a multi-billion-dollar agreement with the Department of Defense.
Multi-billion?
Yeah, and this morning, Thursday, shares just soared, up 50% on the news.
50% in one day. That's a massive move.
It really is. It signals a huge shift in market perception.
Yeah.
Basically, the government validating their strategic value in a very big way.
Okay, so beyond the headline number 50%, what are the nitty-gritty details of this DoD agreement? What makes it tick?
Right. So the Department of Defense is actually set to become MP Materials' largest shareholder. They're taking a stake of up to 15%.
Largest shareholder? The DoD.
Yep. It starts with an initial $400 million purchase of a new class of preferred stock. Now, this stock is convertible into common shares, plus they get a warrant for additional shares later on.
Okay, can you unpack that a bit? Preferred stock, warrants. What does that mean practically?
Sure. So preferred stock usually gives the holder, in this case the DoD, a bit more security, often a fixed dividend, priority if things go south. Less risky than just buying common stock outright.
Got it.
And the warrant. That gives them the option to buy more common shares later at a preset price. So it gives the DoD a safer entry point, but also lets them benefit if the company really takes off. It aligns their interests,
Okay, that makes sense. And what's MP Materials planning to do with this government investment? Is there a specific goal?
Absolutely. They plan to use it along with, get this, a $1 billion funding line from JP Chase and Goldman Sachs.
$1 billion. On top of the DoD money.
Exactly. They're using all that to fund the construction of a second domestic magnet manufacturing facility.
Magnets? That's the next step in the value chain, right? Not just the raw materials.
Precisely. This is crucial for U.S. independence. China dominates magnet production currently, so that this facility is a direct move to reduce that reliance significantly.
I also saw something mentioned about a long-term purchasing agreement. Is that part of this deal too?
Yes, good point. The company also secured a 10-year deal with the Department of Defense. This basically establishes the government as a long-term, stable customer for MP's rare earth.
Okay.
And, critically, there's a significant price floor built in, $110 per kilogram.
A price floor. So downside protection for MP Materials.
Exactly. It's not just about guaranteeing revenue. It's about de-risking their operations, providing a stable base. And it ties directly, as you said, into that national security goal of reducing U.S. dependence on, well, particularly China, for these critical materials. It's about securing the actual supply.
That is huge news. Really shifts the narrative. But, for investors, we need to look beyond the headlines, beyond the sentiment spike. Let's unpack the core fundamentals. How's the company's financial health looking? Start with revenue, maybe profitability.
Right. Good idea. So on the revenue side, things look pretty strong, actually. First quarter 2025 growth was solid. Revenues up 25% year over year. Came in at $60.8 million.
25% growth. All right.
Correct. Yeah, their main materials segment, that grew 14%.
Mhm.
And importantly, their magnetics division, that's the newer, higher value part we just talked about, it's showing growth too. It actually generated positive adjusted EBITDA.
Adjusted EBITDA. Remind us what that means.
Sure, it's earnings before interest, taxes, depreciation, and amortization. Basically, it's a measure of their operational cash flow, kind of before all the accounting adjustments
Oh.
kick in. It suggests the core magnet business is starting to generate some operational profit, even if it's small right now. $5.2 million in revenue from that division in Q1.
Okay, so the top line is growing and parts of the business are showing some operational profitability. But what about the bottom line? Is the company actually profitable overall yet?
Not yet. Not quite.
Yeah.
The company is still unprofitable if you look at the trailing 12 months, the last full year, essentially. They reported a net loss of around $104.56 million.
Oh, okay.
And that translates to a negative EPS, earnings per share of minus 0.64. So yeah, still spending more than they're making overall.
Right.
However, an interesting point, they did secure $150 million in customer prepayments.
Prepayments, customers paying up front.
Yeah, which is a good sign, right? It shows customers are confident enough to pay in advance for future deliveries. That helps their cash flow significantly while they're still scaling up and burning cash elsewhere.
Okay, so growing revenue, progress in magnets, but still unprofitable overall. Now, given that strategic position, the DoD news, but also the unprofitability, what do the valuation metrics tell us? Is this stock priced for perfection, or is it reasonable?
Well, that's the tricky part. Since a company isn't profitable, you can't use standard metrics like the P/E ratio, price to earnings. There are no earnings.
Right, no E and PE.
Exactly.
Yeah.
But if we look at price to sales, okay, the market cap is around $4.9 billion now after that jump. Trailing 12 months revenue is about $216 million.
Okay.
So if you do the math, the price to sales ratio is roughly 22.8x.
23 times sales. That sounds high.
It is quite high, yeah. To put it simply, the market is valuing every dollar of their sales at nearly $23. That's a clear sign the stock is priced for very significant future growth. Investors are betting big on the future potential, not the current financials.
Right. They're paying for the story, the strategic importance, and the expected growth. What about the analysts? Are they buying into this valuation? What are their price targets saying, especially after today's news?
It's interesting, actually. The consensus ratings are a bit mixed.
Oh, not everyone's bullish then.
Not uniformly, no.
Yeah.
The average price target is sitting around $28.06. Now, with the stock currently trading around $30 after the surge, that average target actually implies a slight downside near term, about 6.6%.
Huh. So the average analyst thinks it's run a bit too far too fast.
Seems like it, on average.
Huh.
But some forecasts are much more bullish. You see targets expecting average prices up around $38, maybe $39 in 2025.
Okay, that's quite a range. $28 versus $39.
Exactly. That higher end implies, 25–30% upside from here. So there's definitely some disagreement among analysts on how to value it right now. They're weighing that strategic story against the current numbers differently.
Okay, that makes sense. Fundamentals and valuation paint one picture, maybe a bit stretched right now. But what about the technicals? For people maybe looking at a shorter term trade, especially with this kind of volatility, what are the charts telling us?
Well, you hit the nail on the head there. Volatility is the key word. It's striking. The stock trades in a really wide 52-week range from about $10 up to $39.
10 to 39. Wow.
Yeah. And its beta is 2.26.
Beta 2.26. Explain that.
So beta measures how much a stock moves relative to the overall market. Beta of 1 means it moves in line with the market. 2.26 means theoretically if the market moves 1%, MP Materials tends to move 2.26% in the same direction. It's significantly more volatile than the average stock.
So big swings are expected, up and down.
Absolutely. Strong, sometimes dramatic price swings, which, can be exactly what short-term traders look for if they're playing momentum. But it also means higher risk. The current price, around $30, is actually off its recent highs, near $39. So there was a pullback before this latest surge.
Okay, so very volatile, sensitive to news, currently bouncing back hard, but still below its peak. Got it. So let's try and tie this all together. We've got the unique strategic position, the huge DoD news, the growing revenue but lack of profit, the high valuation, the analyst divergence, and the high volatility. What does this all mean going forward? What should investors or maybe traders be watching for? And crucially, what are the big risks here?
Right. Looking ahead, what are the key things on the horizon? Upcoming catalysts. Well, the big one near term is the next earnings report. That's scheduled for July 31st, 2025. That'll give us updated financials, guidance, and probably more color on the DoD deal integration and the magnet facility progress.
Okay, July 31st. Mark the calendar.
Definitely. We also need to watch for updates on that magnetics production expansion. Any news on the new facility timeline, potential new products? That's important. And then bigger picture. Any policy shifts, regulations that further support domestic rare earth supply chains.
Like more government support or incentives.
Exactly. Or even macro things like faster adoption of EVs and clean energy, or maybe renewed trade tensions with China. Those could all boost demand and pricing for MP's materials.
Okay, those are the potential upsides. What about the risks? What could go wrong?
Plenty of risks, for sure. Despite the good news, we can't ignore them. Risk factors. First, the company is still unprofitable. It's burning cash. That high valuation we talked about. It carries significant risk if that growth doesn't materialize as fast as the market expects, or if those government contracts face delays or issues.
Right, the execution risk.
Precisely. Then there are sector risks. Geopolitics is a double-edged sword. It helps them strategically, but any instability could impact things. Rare earth prices themselves are notoriously volatile. And competition, primarily from China, isn't going away. Macro factors, too. If there's an industrial slowdown, demand could drop, trade policies could shift again. And, as we keep saying, that high beta, that wide trading range, it just signals inherent high price volatility. Investors need to be prepared for sharp moves, potentially downwards, too.
Okay, that's a very clear picture of the catalysts and the risks. So this has been an incredibly detailed deep dive. If we go back to that core question our listener might have, is MP Materials a good time to buy now? What's the final assessment? Summing it all up, what's the takeaway from all these sources?
Yeah, boiling it down, the overall assessment from the sources we look at gives MP Materials about a 6.5 out of 10.
6.5. So better than average, but not a slam dunk.
Exactly. That number kind of represents the tension, right? On one hand, you have this immense long-term potential. Its unique market position, that huge DoD validation. It's a front row seat to this critical minerals geopolitical game.
Right. The strategic angle is powerful.
Hugely powerful. But on the other hand, you have the risks, the current unprofitability, the high valuation that's baking in a lot of future success, the inherent volatility. It's fundamentally a high-conviction, high-risk bet on the future of U.S. industrial policy and the clean energy transition, rather than a comfortable value play based on today's numbers.
High conviction, high risk. That sums it up well.
Oh.
So given that tension, is there any guidance on maybe a best entry price or specific advice for different types of investors thinking about dipping a toe in?
Yeah, the sources did offer some thoughts there. They suggest a potential best entry price range might be somewhere between $25 and $30 per share.
Okay, so maybe waiting for a bit of a pullback from the current $30 level.
Potentially, yes. Entering closer to that $25 lower end would obviously reduce your downside risk a bit, especially given the volatility and those mixed analyst views we discussed.
And for different investor types.
Right. For short-term traders, this stock is really only suitable for experienced traders, people who are comfortable with and can manage that extreme volatility. You absolutely need to watch that upcoming earnings release on July 31st. Keep a close eye on technical signals.
Stop loss is essential, I assume.
Oh, absolutely. Consider a tight stop loss, maybe 8–10% below your entry to protect yourself. And if you catch momentum, maybe target a 15–25% profit. But it requires very active management, not a set and forget trade. For long-term investors, for them, MP Materials is more of a thematic play, a bet on that whole domestic rare earth supply chain story, the energy transition. It's suitable if you have a higher risk tolerance. You have to be willing to hold through the inevitable volatility, through the periods where it's still unprofitable, because you believe in that long-term strategic growth. It's about the destination, not necessarily the smooth ride getting there.
Fascinating. What a journey this deep dive has been. From, its unique position as the only Western Hemisphere rare earth facility to that absolutely massive Department of Defense deal today, and digging through all the financials, the valuation, the technicals. It's really clear MP Materials is a company with incredible strategic importance, but yeah, also significant volatility and risk attached.
Absolutely. And if you step back, look at the bigger picture, this whole situation, it raises a really fascinating question, doesn't it? How will this increasing geopolitical focus on critical minerals fundamentally reshape global supply chains?
Sure.
What does it mean not just for MP Materials, but for other companies, maybe even other countries, trying to secure these essential but often really volatile resources?
That's a profound thought to end on, something for all of us to really chew on.
Indeed.
Well, thank you for joining us on this deep dive. We really hope this has given you, our listener, a clearer, more nuanced understanding of MP materials right now. Until next time, keep digging for knowledge.